Good morning, dear board members, technical advisor, staff, observers. Thank you very much for joining this last day of the IESBA meeting, IESBA June meeting. We still have a few important things to go through, but I think that we can already say that this was and is being a very successful board meeting, but we will wrap up a bit later today. For today, what do we have? We have first a presentation from the EIOC, an update from the EIOC proposal to slightly amend the mandate in terms of reference and some updates on jurisdictional developments and other selected developments that the EIOC will want to share, but also a presentation from Andrew Rodenko from IESBA. Welcome, Anna. Thank you very much for joining us, for accepting to make this presentation on issues related with private equity firms and their relationship with the accountancy profession. And after that, we will have a brief update on the ethics standards for tax planning rollout, after which we will have the second part of our executive session, which we started yesterday. And this is the plan for today. So without anything else on my side, I'm going to give the floor to Vania, please, to update us on the EIOC developments and reflections.
Thank you, Gabriela, and good morning, everyone. It's been a while. The last time that IOC was here was in Abu Dhabi last March and last year. We have a new IOC, new members, Majid and Rania, and we have also two new angels to take care of us in the person of Linda and Jan, that has been helping us to restructure the operation of IOC. The idea this morning is to present a very slight change that we are proposing in the terms of reference, and also discuss the note on jurisdictional updates that were delivered as part of the material for this meeting. If you want to highlight something, we are very willing to hear from you. But we intend to do that very briefly because the idea is to save time for the presentation from IESBA, Ana Duda, because he's already with us, to share with us how they are structuring the Committee of Ethics in IESBA, the circumstance when private equity invests in firms. I think that's it. So I will then pass the word for Jen, that will run with us the changes that we are proposing in the terms of reference. Please, Jen.
Thank you, Vania, and good morning to everybody. Let me just move this a little bit closer. So as indicated by both Vania and Gabriela, that we slightly amended the terms of reference from the EIOC. You would note from, if you've seen the markup, there's very slight changes, and the changes predominantly in the terms of reference highlights the changes from the consultative advisory group to the Stakeholder Advisory Council. Some clarification and some word changes in that as well. The meetings of the EIC changed from quarterly to twice a year, but also indicating if there's more often need to meet that will take place, as well as some clarification on the composition around that. The objectives of the EIOC remains exactly the same: to oversee the activities of the IESBA's emerging issues and outreach initiatives carried out in accordance with the statement of working processes that do have some changes. That is an annexure to the document, as well as then the second objective is to report and advise IESBA on topics in relation to these emerging issues and outreach. The responsibilities, as there's some few changes, but it is just highlighting that in respect of emerging issues, the review of emerging issues is screened by the IESBA staff and agreed with those items that would merit consideration for this board, as well as the IESBA and IESB Stakeholder Advisory Council, and also to report then on selected matters as appropriate and to obtain the views of both boards. In respect of the outreach, there is also the IOC's responsibilities is to review the outreach activities and provide the IESBA on how to improve them, and considering the range, focus, and approach of the outreach, and also to monitor the development and maintenance of the IESBA's media strategy and advise in relation to that. On the working processes, the changes was brought in just to make it up to date, more on some of the areas that would be covered or not kind of screened to get that information to identify emerging issues, but also to bring into the concept the staff-driven model. With that, if I can hand to the board and ask for if there's any feedback and questions on the updated terms of reference and the statement of working processes. Like Vanya also indicated, if there's anything that's needed we can refine better, welcome to add that now as well. Thank you.
Thank you very much, Jan. Any questions, comments from board members? Vanya.
It's good. The idea was just to up to date because the original terms of reference was dated on 2013, so it was the right time for us to revisit slightly. But we do intend to see how we conduct the due process of IOC and present a proposal for the September meeting. And we welcome any kind of suggestions, recommendations from the board for us to take into consideration while designing this. We want very much to find a way of engaging stakeholders to provide us information from the regions and locations that we are not able to tap so easily, so they can have a voice and help us to identify very early on any kind of circumstance where these boards should be alerted about any kind of problem. And about the jurisdictional up-to-date, it's another thing. In the past, we used it to have board members presenting some up-to-date from their regions. As we are trying to implement the staff-driven operation, the staff is using the reports they collect from the national standard setters and others about this up-to-date. But we always be open to highlight any kind of case presented that you think it's necessary for us to go deep. And in this circumstance, we also welcome any kind of suggestion to make it very participative in the board, this kind of up-to-date. That's on my side.
Thanks, Vanya. Can we just then, I don't know if it's needed to approve the terms of reference, Ken, or is
it's really just a almost just a show of hands as from the board as to whether anybody has any objections. Otherwise, this is considered approved. So anybody on the board has any concerns, questions around those updates and refinements to the terms of reference? So they're taken as approved. Thank you.
Thank you, Ken. So then going on to the jurisdictional database, I'm just going to highlight and we're going through in detail. So with the topics that was shared, we noted that a lot of the jurisdictions are currently updating their code of ethics to align with the recently approved pronouncements that are coming into effect at the end of this year, which is the definition of public interest entities as well as technology. As also at the time that this was submitted to us, a lot of the jurisdictions was busy responding to the exposure draft for both sustainability as well as the use of experts. Also, we noticed that with the EU countries was looking at the transposition of the CSRSD into the national law. So that was also noted. And then on the topic of technology, those topics on artificial intelligence and digital assets will be passed to the technology working group, seeing that I'm also part of that working group. So it kind of aligns. And then before I hand over to Vanya to introduce the speaker on the topics that we would like to bring to the attention to the board, I don't know if there's any questions or updates that the board members would like to raise at this time.
Thank you, John. Any comments, additional information? So everything seems perfect. Vanya, before you you introduce Anna and the next presentation, let me just say a few words. I was expecting the board members or waiting to see what comes up, but I really need to stress again, and this is something that I've been saying over the last 2 years. Each time we have the EIOC presenting at the board, this is an extremely important committee, which I think that going forward and having in mind everything that we discussed yesterday, namely on adoption, implementation, capacity building, etc., but also the new strategic work streams that we are advancing, and the new approach of this board to the relationship with stakeholders, with the outside world, with the importance of making an impact, etc. This cannot go without the help of this. I mean, I think that we will not be successful unless we use this committee as we should, because it's really our radar. It's a radar, it's a screen, it's a sponge. I like the term definitely, but it's our open door to the world to absorb and bring to us what we need to know about what's happening around. This is absolutely critical for us to make decisions, the right decisions, to have the right perspective, and to be informed at all times about what's going on and what are developments or happenings or whatever that may deserve our special attention. Also, speaking about, and yesterday we had that conversation as well, the need to tell stories, the need to simplify our message to make it more attractive, etc. This is this results very much from the observation of real cases. I mean, we can have put our imagination in this work and create cases, but nothing better than observing the reality and the cases and building on those cases and those stories to tell a true story to the world. And this is also a bit, I think, the role of the EIOC. I imagine, I don't want to interfere in the dynamics of these groups, but I imagine that the future working group that will be creating a work stream on adoption and implementation will have to relate a lot with the EIOC. So even if it's a different committee, because the EIOC does not develop standards, does not bring proposals for approval, and etc. I don't think it's less important than the others, and we really think should make sure that with this new EIOC or the new terms of reference updated, etc., that we will be in a very good position to use this committee as we really should. So thank you very much, Vanya, for taking this forward and for the care with which you have been working as chair of this committee. So and then if there is no other, Amajit, please.
Thank you. So just one very quick point. Jurisdictional developments. I completely agree with you. This is a very important committee for this board, and we need to keep tracking what are the emerging issues and so on. I think one important input could be tracking specifically the misconduct and the frauds happening in various geographies. There could be lessons from there. So we've had some discussions within the committee on these lines. One specific point which I wanted to make is on the jurisdictional developments. So what we are going to discuss maybe next time, how we can restructure the format for this, make it a little more sharp in terms of getting inputs from the various jurisdictions. First is, can we expand the list of jurisdictions which give inputs? Two is, can we make it in such a restructured manner, more focused manner, that it becomes an important input for this committee and thereby for the board. I mean, from EIOC, if we filter it and we can raise it to the board. So we look at that restructuring of the database the capturing the jurisdictional developments.
Okay, that can be really helpful, Majid. Thank you very much. Mark, please.
Thank you. So 2 comments. One, based on the observation at the NSS meeting, although it is very important to have jurisdictional updates, I think it would lend itself to a better discussion if perhaps the EIOC was able to brigade together the key themes. So rather than a list of everything, it might be the EIOC considers these 2 items to be the most important ones, that perhaps if there's a discussion, that should be the focus of it, rather than a sort of list of everything. And I wonder whether the committee might think about that. The other thing, just based on your comment, Gabriella, about sort of implementation support and other things, one of the things that I'm aware of is there are a number of discussions going on about how the syllabus for training professional accountants needs to develop as the work is potentially changing. So there's a lot of interest in technology, a lot of interest in sustainability. Are we making sure that we capture any sort of ethical implications of that that are coming from consideration of changes to the syllabus for training purposes, to make sure that we're ahead of that?
Okay, thank you, Mark. Food for thought for the committee. Vanya, please.
Thank you, Mark, for the suggestions, very good ones. The idea of having the full report there is just because being a board member in a specific jurisdiction, something that for us can be interpreted as something less important for those board members who are there, it's some opportunity for them to stress that point for us. But we do intend to highlight what we perceive as important to help the board to keep up to date. Very good input. About the syllabus, IFAC is proposing changes in the educational standards for the first time in many, many years. And they will be making a presentation for IRL, that is the United Nations Association in Latin America, next July. And my intention is to collect from this presentation any kind of point that should be taken into consideration by IESBA. And I agree with you, that's something very important for us, but we intend to do exactly that. Thank you.
Thank you very much, Vanya. I think that there are no other comments, so I think that we can move forward and ask you please to present the presenter.
Thank you, Gabriela, and thank you, Anna, for accepting our invitation to be here today. Anna, I hope I pronounced correctly your surname. Is not something so easy. And Durekas is currently chair of ICPA Professional Ethics Committee, also known as PEEC. She is an audit and assurance partner at Grant Thornton LLP, and a principal of Grant Thornton Advisors as well. At Grant Thornton, she is the firm's national partner in charge of independence and ethical standards. Anna is on various ACPA PEC task forces, and she's currently co-chairing one on alternative practice structures, also referred as APS. She's here today to inform us on the work on the task force has done to date, including some of their preliminary conclusions. As part of her presentation today, she'll be providing us with a high-level summary on how those structures that are developed by CPA are taking care of the circumstance when a private equity firm invests in an accounting firm. So Anna, welcome and thank you again. And the floor is yours.
Thank you. Thank you very much for the introduction and for inviting me today to discuss this topic. This is a very hot topic in the US, And Peak had formulated the task force back in November of 2022, because about a year before that, we started seeing some mid-sized, small-sized firms being invested by private equity firms. The task force, has met at least 18 times. This is a very complex area, and there's a lot of work to be done because it is very complicated with respect to these structures. There's also a co-chair as well. We do have a couple of attorneys on the task force that provide us their legal perspective of these transactions. And some of the members are from firms that have gone or are going through a alternative practice structure as well. And we've also have other observers, and we also invite others to attend our meetings. And also we do request input during the peak meetings from others regarding this topic. And I do want to mention that, this topic is very complex, and the firms that have gone through or are going through these transactions are working closely with attorneys that specialize and have experience in these types of transactions. And many of the firms, or most of the firms, have also had discussions with the SEC on their framework with respect to independence, because they all want to get this right. And the SEC doesn't have any specific guidance on APS transactions. However, you do use the current rules that they do have in place, and also their general standard. And we'll spend a little bit more time going over that as well. I did have one question. Can I move the slides, or how does that work?
Yes, just say when you wanted to move, that
Okay.
will be moving for you.
Okay, got it. I
Thank you.
wasn't sure if I was supposed to move those myself. Okay, if we could go to the next slide. And then I encourage questions throughout. I'll stop after key sections, and if there's questions, let's just address them real time. So this slide is really on here just to convey the experiences that the task force has received from talking to the firms with these structures. And all these firms really want to get this right from an independence perspective. And they are willing, and the PE firms are also willing to learn and be educated on the independence requirements, because they do want to make sure that they are in compliance with regulations and all the ethical guidance. Next slide, please. So as I mentioned, Peak had approved this a while back in November of 2022. The task force really started meeting, I would say, in the winter of 2023. And the main charge that Peak task force has is for them to determine whether this increase in private equity investments in public accounting firms creates a need to revise the AICPA Code of Professional Conduct and or to issue non-authoritative guidance. And the task force has determined that it's going to be a combination of both, revising the code and also issuing non-authoritative guidance. We have not presented any draft of the code revisions yet to Peak. The task force is starting to work on that right now, and we're hoping, probably at the November Peak meeting, that we will have at least a draft of the revisions for the code. So currently the AICPA does have a interpretation on alternative practice structures, and this was established many years ago. However, it does not take into account private equity investments. So that's why there's a need to revise accordingly. And the task force doesn't want to create like a new interpretation that is only geared towards private equity, because we know there's fast changing the way these transactions are occurring, and the types of transactions that may occur in the future may change. And so we are trying to make sure that whatever is revised, it can relate to other investors as well, besides private equity firms. So the main direction that the task force has taken is really looking at the covered member approach and then following an application of the conceptual framework for individuals that go beyond the scope of a covered member that could create independence threats depending on what their role is in this structure. And the task force, we had a meeting yesterday, we've started to spend some time on looking at factors that members can consider in their evaluation, especially when they're applying the conceptual framework to determine what types of independence requirements may be needed for those individuals that are not actually deemed covered members. Any questions so far?
Apparently not, Anna, so you can proceed.
All right, next slide, please. This slide just highlights the task force activities that we've done to date. We spent a lot of time looking at these ownership structures and their governance. And it's been very helpful to have these other firms that have gone through this to describe how the ownership structures have been finalized for their particular APS and the governance structure as well. Also looking at the SEC guidance. The SEC, as I mentioned, doesn't have any specific rules or interpretations on the APS, but back in 2022, Paul Munter, the SEC's chief accountant, did have a speech, and he did mention that these transactions are on a rise and independence needs to be considered. And that would be, and he also mentioned in his speech that it would be a very high hurdle for these accounting firms to be auditing anything in that structure of the PE firm that has invested. So I know all the firms have taken that into consideration because that's very important. State guidance, there isn't anything specific, but I know the state boards are also looking at this as well. The state boards do have some guidance with respect to the accounting firm and the non-accounting firm. Because the next slide, I'll show you a slide that kind of depicts how the structure is going to look. And since there is going to be a split between the accounting firm and the non-attest firm, I know the state boards do have some requirements with respect to that. And the reason why there is a split is the CPA firm cannot have an investor that's not a CPA firm. And the next slide will depict that a little bit more. Again, we've spent a lot of time looking at the current APS interpretation. The APS current interpretation does not use a covered member approach, but they identify certain individuals as direct superiors or indirect superiors. So what we've done is we've looked at that and compared it to the covered member definition, closely aligned, but there are some differences. We've looked at key assumptions because these transactions, a PE firm may have a controlling or a non-controlling interest in the advisory firm. So we've thought about different assumptions that need to be considered and how those would be evaluated under the applicable independence rules. And we've gone through different scenarios, exercises to develop our preliminary conclusions. And I want to mention these are preliminary conclusions that the task force has. And obviously we've discussed these at the peak meetings as well. And the interpretation that will be exposed, obviously we'll get more input from the public on those conclusions that we ultimately reach. Next slide, please. And I know this may look a little complicated. This particular scenario is a non-controlling investment scenario. So you have the PE firm on top, there's a general partner, and then the fund one, is what's going to invest in the non-attest entity that's in green. The non-attest entity only provides non-attest services, advisory, and tax. So in this scenario, Fund 1 has significant influence over the non-attest entity. The attest firm is a separate legal entity. There's separate governance boards between the two entities. The audit and attest partners are partners of the attest firm. They are owners. There is a shared service agreement between the attest firm and the non-attest entity. And the shared service agreement is very important because the non-attest entity does provide support to the attest firm with respect to certain resources, accounting, finance, payroll. In addition, all the individuals, including the partners and principals, are employees of the non-attest entity. All the individuals that perform attest services are leased to the attest firm. Any questions on that piece?
Thank you, Anna. Mark, please.
Thank you. So I had the benefit of seeing this presentation at the NSS meeting as well, and for the benefit of board colleagues who didn't, this scares the hell out of me. This is, you know, and Anna presents it in a very measured and considered way, but it is, to my mind, it is absolutely fundamental. And I worry about two things. I worry that the structure that you show us provides a way of assessing independence from a legal form perspective, but not from a substance perspective. So therefore, from a way of, you know, if we look at this as we always do through our public interest lens, there is a risk that what this gives us is a compliance framework, but it doesn't actually protect the public interest in an outcome sort of basis. So that's one of my concerns. And the other thing that I think that mindful of a sort of PE type structure is it has both the benefit and the disadvantage of being able to change very quickly in terms of what is linked, what is not linked, what is controlled, what is not controlled. And therefore, I also worry that you make an assessment about independence, and that independence assessment can be changed or undermined or overhauled very quickly. And so therefore, I wonder, Anna, how you how you and your colleagues sort of looking at this on your working group consider that sort of substance versus form point, because I think it's a really important one.
No, I agree. I mean, and this is like an ongoing monitoring, you know, and I do believe the firms that enter into this have to have very strong controls and procedures in place to monitor independence, and it has to be ongoing. Now, with the SEC independence rules, those are going to be a little bit more restrictive with respect to the entities that the firms are going to have to monitor. And most of those firms, many of them that have gone through this transaction or are going through this transaction, do have issuer audit clients. So their independence requirements are going to be more encompassing of entities in the PE structure in comparison to the AICPA. Now, the test firm and the non-attest firm under the AICPA's network definition, they are still network firms. So whatever before the transaction, those advisory tax folks couldn't provide certain prohibited services or enter into certain relationships are still going to be in place after the transaction as well. So that has not changed whatsoever. But the firms do need to evaluate, their governance structures and who are the members of governance? What independence requirements will they have? Will they be treated as covered members because they meet that definition? And as I mentioned earlier, even though certain individuals may be on a governance of the non-attest entity don't meet the covered member definition, the firm should still apply a conceptual framework. For example, maybe that individual has a material investment in an audit, a test client, or some other business relationship. The firm will have to evaluate that accordingly. It's not easy. I mean, there is a lot of ongoing monitoring here.
Thank you very much, Anna. Tom, please.
Thank you very much. And thank you very much for our presentation. I'm totally agree with Mark in terms of the discussion. Is this the discussion for the compliance or the discussion about the substance? And especially this is the, I think that the PE investment is may have a very big impact on the culture, or the, how can I say, is a so-called the profit-oriented culture versus, how can I say, public interest focus. So this is very serious and big issue. And one point I would like to add is that the investment of private equity is a sort of the, we often call it an Hotel California situation, because the often PE, when they exit is an M&A or the, for example, the IPO. But the IPO for audit firm is very difficult. And an M&A means that the other audit firm provide a little bit on the capital with a higher price. It means that it's very difficult for other firms to intervene in this situation. It means that once the private equity go into this area, it means that always this is always private equity investment will remain as it is. So this is a very important topic and very important, how can I say, issue to discuss beforehand to incorporate this type of discussion. Thank you.
No, I agree. I mean, culture and quality is very important. And, talking to the firms that have done this is on their list, high, it's a high priority to maintain. And the firms have to focus on that with the PE firm. Now, do we all know what the exit strategy is going to be 3 to 5 years? We don't know 100% on these firms that have done it. Could they take the advisory firm public? They could. Could they sell their interest to another PE firm? They could. We haven't, I think some of the firms right now have been maybe 3 years into this. So maybe in the next year or two, we'll see what the next equity transaction is for those firms that have gone through this and how that impacts the test firm. I don't think the test firm itself would be the one that's going public. It would be the non-attest firm. But yes, I mean, those are things that need to be considered. And that's why these firms have specialized attorneys that practice in this area. And I think the independence is compliance, but it also looks at the substance over form as well. And that's when you start looking at the conceptual framework or the SEC's general standard from an appearance perspective, what those other relationships may exist within the alternative practice structure, or those other relationships that the PE firm may have, and those need to be monitored ongoing.
Thank you very much, Anna. Before you move, we have some questions. So, Christelle.
Thank you, Chair. regarding the means to analyze this substance over form, not at the point of the transaction, but on the living point. Did we identify what were the changes in terms of strategy, cost pressure, revenue objectives, and to what extent what we discussed this week about the impact of in culture and governance. We talked about the impact of different cultures on revenue growth, etc. I wonder if such a structure where you still have connection in interest, wealth in interest, because the non-attest partners participate to the attest partners participate to the non-attest ownership, right? And so I suppose they have part of that revenue, and they share a lot of things, etc. So I suppose they share also some pressure on cost. So did we analyze what, so over the time, what in fact were the changes in behaviors, objectives that resulted from such a structure?
Right.
Thank you.
And I understand, well, these are newer transactions that we're seeing over the last 2 or 3 years. So I don't have any insight on that, but I know that the test firm does handle the compensation generally, depending on how each firm structures it, and approves the compensation of their audit partners and personnel. And they also put their budget together for their operational needs as well. And in the shared services agreement between the test firm and the non-attest firm, many of these firms have put provisions in place to make sure that the test firm receives the resources it needs in order to comply with quality, professional standards, and the independence requirements. So many of the firms have built that into the agreements, because that is a concern, quality, and making sure that the test firm has the resources it needs to operate effectively and also to maintain the quality. And then again, that's very important for the CEO of the test firm, because that is a different person typically from the CEO from the non-attest firm, to make sure that that's the case and they get the resources that they need. But it's really not, when you think about it, even today, in today's structure, there's also competition within a firm for the resources and getting the additional dollars spent, whether it's in systems or new methodology. And many of those are prioritized today because of the resource needs that the firms have. Now, with these investments, PE investing in the non-attest entity, there are more dollars or more resources to assist with that. And yes, the non-attest firm probably is going to grow their advisory practices, which many of the accounting firms today grow their advisory practices. And the firms still need to maintain robust independence requirements, and new, employees or principals will be coming into the non-attest entity, and they need to still comply with those independence requirements. So it is up to the test firm and the non-attest firm to make sure that they comply accordingly with this. So again, this is a little newer, so we haven't really followed, what has happened after 3 or 4 or 5 years with respect to the quality of the work. I know there's a lot of growth, though, that has happened within those firms that have taken on these type of structures.
Thank you, Anna. Still one or two more questions. Chana, please.
Thanks, Anna, for the presentation. I also have some concerns in a sense, the long term versus the short term, because generally the PE firms will want would have a short term focus and they would want exit strategy as well, which will make, making money and exiting from the non-test firm. I mean, in Australia, we have the situation where a lot of the consulting arms have grown very fast, partly because a lot of the public sector things the government had outsourced as they were cutting the public sector down, and now it's sort of turning a bit around because they have suddenly realized maybe they should have a good public sector which can provide advice to the government. And in that situation, it was the revenue and profit motives which have sort of caused a lot of ethical failings. And this seems like another scenario that could lead to a similar situation. So in a sense, to what Mark and Tom said, I think there is concern in this. And I guess the question is, I'm wondering, why did the PE firm suddenly become interested in accounting firms? Is it because they think it's a way of making money, or is it the partners trying to exit with a good return? Just a question.
From what I've heard, again, many of these discussions happen at a higher level at the firms and at the PE firms, but many times the PE firms are really the ones reaching out to the accounting firms. There's just been an interest over the years to look at professional service firms versus their typical portfolio companies where it's like a manufacturing company or an IT. They're starting to look at professional service firms, consulting and accounting firms. And I guess they see a potential there for growth opportunities for those firms. And the firms tend to be more mid-sized and smaller firms. I think it'd be something very difficult to do with a large firm like a Big Four. But, they want the firms to be successful in this, but obviously they do want a return on their investment as well. But I do, from what I've seen so far, the firms that have gone through this for 2 or 3 years or 4 years, I haven't seen anything in the news on any ethical concerns, but yes, that could happen even without an APS structure, right? And we've seen different issues across many of the firms with ethical independence issues that have been sanctioned by regulators. So it's important still that these firms do not forget their responsibilities with respect to independence and quality, and they have to build that in. And they have to have good support from the PE firms too, because the PE firms do need to provide certain information to these accounting firms in order to monitor independence, and it's ongoing.
Thank you, Anna. Sorry, I thought you had finished.
Yeah, it's complex, but I do want to mention one other thing, that the PE firm and their managing directors and leadership are not managing the day-to-day of the operations. They are leaving that to the firms themselves because they don't have experience with that. So they're not coming in and running the non-attest firm or the test firm whatsoever. That is held in the hands of the partners and principals of the non-attest entity and the test firm.
Okay, thank you very much. Rania, please.
Thank you very much. So just, are there any, from a legal perspective, are there any ultimate beneficiary ownership risks, concerns, threats that you are considering? I'm not sure about the, the regulations that surround this, but is this at all an issue once you bring in private equity firms? So.
Yeah, I mean, there are different owners and you have to look at, in many of these APS structures, there's not necessarily just one PE firm. One PE firm may have a certain ownership percentage, and then many times there's a couple other PE firms or other investors that will also have an investment in the non-attest entity. So the firms do need to understand those investors and evaluate independence accordingly. And if there was going to be a change, like if one of those investors was going to, sell a portion of their investment to another investor, the accounting firm needs to vet that and make sure that they don't have any independence conflicts or other conflicts if there's a change in ownership. Now, when you mentioned beneficial ownership, I don't believe there's any other owners. Some of these P investors may have could be an individual that controls the PE firm. So that individual is also subject to certain independence requirements. And the firms do need to put that in place and have a monitoring process. Now, the non-attest board would be made up of different representatives of the sponsors that are involved. In addition, the non-attest firm does appoint, their CEO and other members to that board, and they all have votes based on their ownership structure. And those individuals that are on the board, obviously the individuals that are from the non-attest entity are already subject to independence requirements, but those other ones that are from the sponsors, that is the PE firms or outside board members, also have independence requirements, and those have to be monitored. So for example, you would not want anybody on that governance board to be on the board of an audit client. So the firms do need to make sure that they have a listing of all the boards that they're on, even though they're not, attest clients or audit clients today, but they could be in the future. So if there was an audit opportunity in the future, and that individual wants to stay on the board, they would have to not be on the board of that other entity if it's to become an attest client. So all that monitoring does need to be put in place. And, talking to other firms, they have increased their personnel and independence in order to be able to have this ongoing monitoring in place and put in preventive controls to make sure that independence is not impaired. I don't, does that answer your question on the beneficial owners?
Yeah, so it does definitely, but my question is more from, you mentioned that you have lawyers who are on your committee that look at this issue from a legal perspective, and it is my understanding that some different jurisdictions around the world and even in the US, different states have different levels of transparency when it comes to, like really pushing or promoting beneficial ownership. And that has been an issue worldwide for transparency and corruption purposes. And so I was just wondering if that might create an additional layer of risk in this case. So
yeah. I don't know if I have anything more on that, but I know transparency is very important. I believe most of these firms that are in their engagement letters and their agreements, they outline what the structure is. So that way their clients acknowledge that that advisory firm is part of an alternative practice structure. Same thing with a test firm. I know many of them have also added guidance that when for example, let's say a portfolio company of the investor requests certain non-audit services, right? One could view that as a potential conflict. So many of the firms have built in provisions and languages that the client would review and acknowledge that the non-attest entity is part of that PE firm. And they have to sign off on that. And if they didn't, that means, you know, the non-attest firm wouldn't pursue that non-audit engagement letter. So I know firms are taking actions with respect to that and being transparent with audit committee communications of the test firm clients. Many of the firms, you know, have quarterly conversations and discussions and PowerPoints that they put together on different matters. And many of the firms have put in slides on this APS structure and also to discuss, you know, independence considerations and potential risks, and really notifying the client that if they are going to consider a relationship with that PE firm or sponsor, that they should inform the audit partner, the test firm, about that relationship to make sure it doesn't conflict or create an independence and pairing issue. But that really has to be done at the firm level and educate internally, right? And making sure that you educate your partners, have this well documented, have FAQs, guidance for your personnel, and build it into your day-to-day handling of client affairs. Many of the firms have also added specific questions in their client acceptance regarding this. They restrict the entities in the PE structure to make sure that individuals within their firm do not invest in those entities. Also, they put in safeguards where if anybody wanted to enter into any relationship, whether it's a business relationship or a non-audit relationship, prior to entering into those, they need clearance from like a key relationship partner that's been identified, and with the support of independence to make sure there's not a conflict. But that's really the responsibility of the firms to put those procedures in place and have individuals monitor that on ongoing. It's very important because the law firms, you know, may give you guidance on that, but it's really up to the firms to put those practices and procedures in place.
Thank you very much, Anna. And Sunam, please.
Thank you, Anna. This is very interesting. First of all, I wonder if this phenomenon is unique to the US, or are you aware any country which has the similar or same issue? Secondly, if the attest form or non-attest form has network internationally, there could be other extraterritorial issue that need to be taken into account. Do you happen to know any other further issues around the world? Thank you.
Yeah, I've heard like globally, some jurisdictions have seen this with law firms, but I do think it's more common now in the US over the last 2 to 3 years with respect to PE firms, you know, obtaining an equity stake. Yes, global networks, that needs to be considered. And there is a slide on this that will talk about this in a little more detail. The non-attest entity and the test firm, if there's a global network, are going to be part of that network. So that non-attest entity cannot be providing any prohibited services to, or entering into any prohibited relationships that would impair another network firm's independence. That does not change. I've talked to some counterparts at different firms in our network to see, have like the FRC, have they looked at this? Have they given any guidance on this? And it's no, because I don't believe it's really prevalent yet in other jurisdictions. So then I think they look at, the current rules, look at things from a reasonable third-party perspective. If they have certain relationships, maybe with that PE firm, as to whether they would continue on if the US firm has obtained an investment from a private equity firm. So yes, those other member firms do need to evaluate accordingly based on their local jurisdiction, if there's rules, or applying more of a reasonable third-party test or a conceptual framework approach.
Thank you, Anna. And finally, Ken, please.
Thank you very much, Gabriela, and thank you, Anna, for this presentation. It is a very interesting development, to say the least, but it does certainly throw up a lot of questions, at least in my mind. And I just had, I suppose, five points I wanted to raise. First of all, as I look at this diagram, well, it is very complicated. It looks very complicated, and I think it's almost begs people to start to peel kind of the layers of the onion and try to understand the ramifications of all the different interactions once you start to insert the private equity investor, the funds that it invests in, and basically how the ATES and non-ATES partners are going to be part of the ownership structure and so forth. I suppose my first question is, as I look at the structure, where yes, at the top we have the private equity investor, and then we have general partner fund one, and then fund one itself. If I were to look at the definition of a firm in our code, and it might be the same definition in the ICP code, the definition of a firm essentially says it is basically a corporation or a sole practitioner, a partnership, etc., but also any entity that controls such parties. So if we were to look at the control relationship here, one might say, well, the private equity investor doesn't have control per se. And as you say, you've used a scenario of a non-controlling private equity investor. But with regard to the general partner fund one and fund one itself, might there be direct control relative to those funds? And therefore, would those funds in substance be caught under the definition of a firm? And therefore have to submit all independence requirements in regards to basically audits, etc. So maybe that's one question. The second question I had is basically the description you have in the middle of the slide here, where it says B board seats a significant influence. BOD, which I presume means board of directors, may make compensation decisions for ATES firm partners. And I suppose I would better understand this if it's read that the board of directors may make compensation decisions for the non-ATES firm partners. But if it's the board of directors for the non-ATES firm that is making compensation decisions for the ATES firm partners, first of all, it does trigger independence implications in the sense that in our definition of audit team members, that definition captures essentially individuals who determine the compensation of audit partners and so forth. So would those board of director members be caught under that definition of audit partners and therefore need to submit to independence requirements? But more importantly, might there be potential influences from the non-ATES board on the ATES firm partners? So that does trigger, I suppose, an ethical question. Thirdly, yes, I am concerned as well with regard to the medium term as the private equity firm will look for an exit. almost by definition, private equity investors are not long-term investors and they don't stay forever. And let's assume they were to exit through a listing of the non-attest firm, and then suddenly we find that the non-attest firm is fully exposed to the rigors and the brutalities of being on public capital markets and having to answer to investors, etc., and all the distractions that would bring with regard to the management and the leadership of the firm itself. So there are a lot of questions there. My fourth point is basically the point I think Krista raised earlier, which is the implications on the firm culture when essentially the firm is moving or transitioning away from being a professional services firm to essentially being a corporation answerable to investors and so forth. So there are sort of there is, I suppose, a cultural dimension there that would merit some further reflection. And finally, with regard to the owners of the non-attest entity, potentially including the attest partners themselves, I'm just wondering whether there's been a full analysis and full understanding of what might be the potential conflicts of interest when the attest partners themselves are going to be sharing in the ownership of the non-attest entity. And clearly, I don't have the answers to all of these questions, but this is just triggering questions for further thought. Thank you.
Questions. I might kind of start backwards here. The legacy partners, do have an ownership interest in the non-attest, but going forward, they're all employees and they're paid a salary. And generally, in most situations, and that's why we put there in the non-attest board of directors may make compensation decisions for the test partners. Typically, that's not the case, but the reason why we also put that on there is to raise the independence concerns. So if they do, those individuals that are on the board would be treated like a covered member, like a partner or principal of the test firm or the non-attest firm. So some firms have structured it differently, where there's that test board or a compensation committee makes those decisions, not the non-attest board. So we've spent a lot of time talking about that in the task force, that if that board has the authority to approve individuals' compensation where those individuals are test partners, they have to be treated like covered members. And I think all firms that have gone through this understand that. Now, firm culture, I understand. I think that's the responsibility of the firms to make sure that the culture remains strong and does not demise because of such transactions. Now, long term, what is the exit strategy that the PE firm has? I don't know quite yet, what it is, right? For many of these firms, will it be an IPO of the non-attest firm, or will they sell off the test firm to another accounting firm, or will they sell their interest to another PE firm? I think it's still kind of a newer area, but I do understand the risks there if there's an IPO. Under the network firm definition, we did spend time looking at the AICPA definition. And again, this example is non-controlling, but even under a controlling, which is on the next slide, we determined that the fund, the GP, and other entities in that structure are not part of the network firm. They do not meet the definition of a network firm. Now that's under the AICPA independence rules. Now under SEC, I believe the firms are treating them differently. And again, the task force does understand there's appearance concerns and there's certain relationships that still need to be evaluated accordingly with respect to the GP, other entities, or portcos in the fund, the P investor, if it's an individual, the RIA, and so on. So the task force has looked at that. So for example, maybe the next slide, let's go to the slide 8. Maybe that'll be helpful. I can kind of outline a couple things. So the task force has spent a lot of time looking at, could the firm, the test firm, provide a test services to other portcos in the same fund or in a different fund? Now, this is a controlling investment scenario. The fund, one, does not control the non-attest entity, but it may control other portcos or have significant influence over other portcos. And in this situation, our preliminary conclusion is that the audit firm has to apply the conceptual framework to determine whether it can provide the financial statement audits for those portcos like ABC or DEF and so on. I know most of the firms today have put in policies in place where they would not audit anything under Fund 1, under the AICPA independence rules, and probably not anything under Fund 2 or 3 or 4 either. Now, if those were SEC issuers or subject to the SEC independence rules, the firms are not providing any of those services to those entities because of independence. So the other thing that we've looked at is what happens if they ask the test firm to audit Fund 1 or the GP. And our conclusion, preliminary conclusion, is that the audit firm should not be auditing Fund 1, the GP, or registered investment advisor with Fund 1. Now, with the other funds, it's more of a conceptual framework. But from my understanding, the firms are being more restrictive and not going to be entering into those type of audits of auditing the fund of the PE firm that has an investment in the non-attest entity. So we've spent a lot of time looking at those other type of audit relationships as well, to make sure that when we revise an interpretation, that that's built in accordingly.
Anna, sorry for interrupting you, but Vanya was waiting to make a question. I think it was about the previous slide. So Vanya.
Not exactly a question. I'm conscious about the time. We just have 7 minutes resting for the presentation. And I know that you have still a few slides that we would not want to miss the content. So I understand that what ICPA is doing is very important to what IESBA does. And I understand that we will reach to you to get more details about this content. But I suggest that you go through the rest of your slide and you save questions to the end if there is enough time. Otherwise, we will reach to you after the meeting in the next few weeks in order to get details and then share with the rest of the board. Thank you, Anna.
No, because this is a very complicated topic and it's hard to really put it in 1 hour. So I'd be willing, if you have a small group that wants to talk about APS, we could have a working session, or I can just be part of your discussions and answer questions as well. Okay, so I think we'll just go to slide 7. And this will tell you the different relationships that the task force has been looking at. And as I mentioned earlier, we're looking at who's a covered member, looking at the non-attest entity partners. They're all going to be covered members with respect to the audit clients. We're looking at the non-attest professional employees, the CEO, senior leadership, the board members, and those have to be evaluated accordingly under the covered member definition. Now, there's certain individuals that may not fit under that covered member definition, but it's important for the firms to determine whether any independence threats exist. And that's where they apply the conceptual framework. So for example, the non-attest entity board members that don't meet the covered member definition because they're not evaluating the test partners or involved in the individual test partners' compensation, the firm should still evaluate independence under the conceptual framework. Same thing with the general partner, RIA, which is investment advisor. If there's a controlling person of the PE firm, because many of these PE firms have a founder who's the controlling person. As I mentioned earlier, it's not only one PE firm that typically enters into these transactions. There could be other independent investors. They could be PE firms as well. And also looking at the portfolio companies. We also spent time looking at limited partners. Limited partners may have an investment in the fund that your investment is in or in a different fund. What happens if that limited partner is an audit client or an attest client? Well, those investments are passive. Those limited partners do not have any significant influence over that fund, but that's something that the firm should monitor with the PE firm or obtain an affirmation from the PE firm that none of those limited partners have significant influence over the fund. Spend a lot of time also looking at the investees of the independent investors, whether there's any independence requirements, if there's any threats that are created, and we've concluded no. Looking at portfolio companies as well. Again, these portfolio companies under these structures are separate legal entities. They have different governance boards, they have different management teams, different leadership teams. They're in different service platforms as well. So we've spent a lot of time looking at these areas and coming up with preliminary conclusions. Okay. If we can go to slide 9, I just want to show a couple more things. This is a controlling interest, and this is where the Fund 1 controls the portfolio company. And in this scenario, the independence threat is way too great for that accounting firm to audit anything that is controlled by the PE firm or has significant influence and material. As I mentioned earlier, the firms are not auditing any of those portcos under Fund 1. They're being more restrictive, but in the guidance that we want to give or the interpretation that we're going to revise, we would state that no financial statement audit services should be provided to those portcos when you're in a controlling investment scenario with a PE firm. Now, there could be situations where the PE firm acquires a target, and it could be one of your current financial statement attest clients. And the AICPA code does have some guidance on that under its client affiliate interpretation. So it does allow to complete that work, and then eventually it would be transitioned to another firm, because that could happen. But this is where the PE firms, do provide listings of their portcos to the accounting firm in order to monitor independence and relationships. And those lists should be obtained timely. And if there's new acquisitions of the PE firm, those should be, provided to the test firm so it could run its relationship checks to identify whether there's any existing relationships that need to be evaluated accordingly. Okay, if we can go to the next slide, slide 10. This is what I was talking about earlier, about that PEAK task force has also looked at whether the accounting firm can audit other entities in the PE structure, like the fund, the GP, the RIA, and so on. And as I mentioned earlier, the answer would be no, that no attest services should be provided to those entities that are highlighted in red because they're associated with the fund that has the investment in the non-attest entity. Limited partners that I mentioned earlier, if there's no significant influence, there's no concern from an independence perspective if a firm audits that LP, but they need to make sure, as I mentioned earlier, that there's no significant influence and that investment is not material to the LP. It's very unlikely for that to ever happen. Their investments tend to be very small, less than 1% generally. There could be like hundreds of LP investors in a private equity fund. We also talked about other independent investors, as I mentioned earlier. There could be 2 smaller PE firms that are also investing in the non-attest entity, and the test firm should not be providing any audit services to that independent investor. That is the fund that invests. It could be providing other attest services to other investees, but accordingly, the firm should evaluate those under the conceptual framework to make sure that they don't have any concerns from an independence perspective in taking on audits of investees, of independent investors. And the independent investors are minority investors. They generally would have, less than 15% ownership. They're not the lead sponsor. Okay. How are we doing with time? Do we have a couple more minutes or should I try to wrap it up?
Yes, I think that we can extend for 5 minutes or something. Okay.
Okay, thank you. Next slide, please. Okay. This slide, we've spent a lot of time talking about portfolio companies in this structure providing non-attest services, prohibited ones, to attest clients outside of the structure. So the test firm has other attest clients. Could one of those other PE firms provide a prohibited service to your attest client? And we concluded, our preliminary conclusion, that that generally does not create an independence threat. If the firm does become aware of those services, it could consider the conceptual framework. Now, we looked at this because the board members, so the board members of the non-attest entity, for example, here, board member A and board member B could be on other boards of the portcos of that PE firm. And that is common to see because the PE firm will place its own managing directors on many of the boards of the portcos that they control or have significant influence over. But if board member A is also on the bottom there on PC board, and that portfolio company provides a prohibited service to an attest client, that would not impair independence. Now, board member A and board member B, that non-attest entity, since it's part of the network of the test firm, should never be providing prohibited services to that attest client. And that's marked on the slide as well. But this is where we landed with respect to other portcos providing prohibited services, non-audit services, or maybe even entering into business relationships, whether the non-attest entity is controlled or not controlled by the PE firm. All right, next slide, please. The global network. We spent a little time talking about the global network. Can a global network firm audit a controlled portco in the same fund as a non-attest entity in the non-controlling investment scenario? And we concluded it could, because the PE firm itself, by definition, does not meet the AICPA's network definition. These portcos have different legal structures, management, governance between the non-attest entity and that portco itself. The network firms are not part of this transaction. The ones that we've seen in the US, it's only the US firm. The network firms are not part of the APS. The PE firm only has significant influence. That was another factor that we looked at. We looked at the PE firm's investments. We did say that, and I mentioned this earlier, that the member firm should look at its local jurisdiction as to whether it wants to continue or consider a new opportunity in providing a audit or a test service to a portfolio company of that PE firm, where one of the member firms, that is like the US member firm, has entered into an APS transaction. We looked at board crossover. We looked at partner crossover too. That doesn't usually happen many times, where the partner also is providing or is also a member or a partner of another network firm. And I know, I think, Ken, you might have mentioned the IESBA code too on the network definition. So that's something that IESBA should consider as to whether those other entities in the PE structure would meet the definition. We had concluded it does not meet the network definition, those other entities in the PE structure. Next slide, please. I think that's really it for today. But I'd be happy to answer other questions if we have a few minutes right now, or if we need to have another meeting, or if you're developing or putting together a small group to look at APS structures, you could also reach out to the AICPA peak, and one of us can attend the meetings, or more than one, and answer additional questions. I hope this was helpful.
Thank you.
I mean,
it was very helpful, Anna. It was very helpful. Thank you so much. I think that as someone has said here, it's a little bit frightening due to the complexity and the things that we see arising from this reality. But it's very important for us to be aware. And even if it's a very US phenomenon, I'm sure that it will spread in other jurisdictions. So anticipating these things is very, very important. So we have a problem of time. We have two questions. I'm going to allow these questions, asking you, Christelle and Sadia, to be as to the point as possible very quickly. And so for Anna to respond as possible, but making sure that we will have opportunities to convey questions to you and receive any feedback or have other opportunities to interact. So Christelle.
Yes, thank you, Chair. Thank you, Anna. It's really amazing the work that has been done, and how the different relationships and types of transaction or relations between all these actors have been described and analyzed. So I suppose I'm still puzzled by the fact that the attest company is relying on the non-attest organization for because it's not autonomous. They are leasing their employees. There is a leasing contract. So I think this is struggles me for the substance of the attestation firm. But I'm looking forward for really understanding, and thank you for this panorama. It's really amazing. Thank you.
Thank you very much, Christelle. Sadia, please.
So I also just want to thank Anna. I read the slides, I heard about this, but I think that we need more conversations to understand what is happening. I was a little bit jealous of Mark because he said he heard about this before, or he had the presentation. It's something that's happening in the US, I understand, but I think the concern from a global board is that this might be something that will affect us with time to come. And if the more we understand, the more ready we'll be to understand the dynamic and the facts and circumstances. I would have loved to delve more into that global network question, because that's how it affects everyone over here. Because does it affect the global network? I'm sure you know this. We have a culture project currently open, and there's a lot of questions over there about culture and the way our code is drafted in protecting the public interest and what type of partnerships would do to that culture. We want to protect the same things, but I just want to thank you for all the work that you've already done in showcasing Judge Day.
Yeah, understood. This is a very complicated area. I mean, we've spent, I said, almost 20 calls already, and each meeting is like over 2 hours. And it's not an easy topic to get your hands around, even in 1 hour or 2 hours. It's very difficult.
Just one comment that if the EIOC is thinking about additional time, I would be supportive of it. Thanks.
Yes, that's exactly. Sorry. Oh, Mark, sorry, I was not, Rich, sorry.
Yeah, I would just comment, it has been reported in the media, this is not a phenomena unique to the US. The events in other jurisdictions have maybe been smaller, but there have been PE companies that have acquired professional accounting firms, and they've acquired other professional services firms, and they have I think there's a general interest globally in this, and so we should be aware of that as we think about any further course of action.
Thank you very much, Rich. So I was exactly suggesting that the EIOC reflects on this discussion, and if necessary, based on Anna's kind offer to keep this conversation going and organize some kind of meeting or dialogue or whatever, that you could think about something like that, and board members who'd be interested could participate. Just responding to you on the NSS meetings, Sadia, this is something that I'd like to raise here to this board. The NSS meetings are available, so for all board members, the agendas are public. So if you think that are topics of interest that they're not public, I'm sorry, but the board members can have access to the meetings and attend if necessary, and if they are interested. So Anna, thank you so much for this wonderful presentation and for raising all these matters of reflection to all the board members. I'm sure this is not, this will probably or most surely not be the last time that we are going to discuss this topic. There is a lot to reflect upon and to understand. I think that we are not yet there to understand everything, all the implications of this. So thank you for your availability for the presentation, and hope to see you soon in other circumstances.
Thank you very much for having me. And if we have other discussions, maybe we should just a thought, break them up in smaller topics, because this was like a lot covered in one. And maybe if there's a specific area that we want to focus on next, we talk about that only, because that might help, and we could have a second discussion on something different relating to the APS. It just might be easier to absorb this topic and break it up in sections if we're going to have multiple discussions afterwards. I'm just throwing that out because it just might be a little bit easier for everybody to have specific topics, and we'll touch on those one at a time. Thank you very much.
Thank you very much.
Take
Thank
care.
you. Thank you. So with this, Vanya and staff, thank you very much for organizing this session, which as we could see was very important, and will be very important, a very important topic for discussion as we understand it. Thank you very much. Moving to the next topic, item in the agenda, we will receive some information and some updates on the tax planning rollout. And for that purpose, I think I'm going to give the floor to Carla, who from the staff is in charge of the support to this tax planning rollout. It's been 2 months almost since the standards have been certified by the PIOB and made public. We have already done a few things on that, and we have addressed some of those outreach moments that we have already had the opportunity to hold, but now it's the time to go a little bit in more detail. And for that, Carla, please. Sorry. Oh, Jens, I see Jens on the screen. Welcome. Very good to see you there.
Good to see you. And
Sanjeev
is
as
also
well.
here.
Sorry,
Yeah.
and Sanjeev as well. Thank you very much,
Morning.
both you for joining us. Hello, and thank you for, I take this opportunity to thank you immediately, both of you, for all the dedication and all the time and wisdom that you have been offering to the board after you left the board. So it's a way of staying with us, but it's a privilege for us to keep on counting on your collaboration and your involvement in outreach initiatives. Thank you, Jens and Sanjeev. But it's still for Carla to present on the rollout. So Carla, please.
Thank you, Chair. I have the pleasure and privilege to close off this very long week on a high note where we reflect back on the good work of this board in the release of the tax planning pronouncements April 15. We have had extensive rollout program in the last 2 months that Gabrielle mentioned, and it is presented in agenda item number 11. First of all, I'd like to acknowledge and thank my task force members, Jan, Sanjeev, Chana, Andy, Laurie, and obviously Ken. And we could have done it without assistance of Dave, Estu, Jake, and Diana. Brunswick was also very instrumental in securing interviews with top-tier firms, media firms, as observed in Appendix 3 in agenda item number 11. So Gabrielle, thank you so much for going out there and informing the world of the IESBA's new pronouncement on the tax planning. If you observe Appendix 1, we had planned for an activity every week since April 15, right out through last week itself. We've gone from east to west, north to south, and we covered all corners of the globe. Yesterday, the board was in agreement that it is very important to go out there and bring live our standards when it is finally released through meaningful conversations and interpretation of what our standards mean to them, those practicing on the ground. And we had very productive conversations through outreach activities, every single one of them at a very different dimension, from Gabrielle and Ken's visit in Toronto in Japan, right through to the visit in Australia where Gabrielle, Jans, Chana, and Jeff fronted Senate hearings on the inquiries that they currently have in Australia. Before I invite further comments from task force members Gabrielle and Ken, I'd like to share some stats that Dave kindly shared in terms of what I see as success factors in the last 60 days since we released the pronouncement. The page where the final pronouncements lives has been visited over 3,000 times, and it's the 5th most visited page on the IESBA website in this timeframe. The final pronouncement itself is the fourth most downloaded publication in the same timeframe. And the IESBA post on LinkedIn announcing the final pronouncement received the most reactions on the IESBA post. So if I may put it very roughly, and this is not an audited number, in the last 60 days, we've reached out to at least a new individual stakeholder every 30 minutes. And this is not taking into account the outreach that we could have had or have in terms of media outlets and Senate hearings. I'll pause here to invite comments from members, and would love to hear from Chana and Gabriella on the outreach that you had in Australia. Thank you.
Thank you very much, Carla, and from Jens as well, who was there, who was a critical element of this team in the tax planning outreach that we had there. But I'll leave it to you, Jens and Chana, if you want to add something.
And just to highlight that I think it was just in time when we published our final pronouncement, and having seen many other discussions in the last few weeks and reading the newspaper, I think we are on the spot time-wise. I hope also content-wise, but we will see how the implementation phase will now go on. But I think even beyond the profession, I have been approached by other professions doing tax advice, being very interested on that document. Thank you.
Yeah, I would echo that sentiment. I think there was a lot of interest in Australia about the tax planning standard, and there was a media article done on the global body issuing a tax standard, and we got some questions on it at the Senate inquiry as well. I think, we did Sanjeev and I did a presentation last week for the South African Institute as well. And in it, initially, they were arguing that it was a competitive disadvantage. And we sort of said, no, it's actually a competitive advantage if you can show that you are adhering to a higher ethical standard. Based on some of, I think they sent us some questions in advance. It was initially, I think, a bit more negative, but I think as Sanjeev and I did the presentation, it became more positive. They could then sort of, SAIC sort of ended the presentation on a high note, sort of saying, yes, accountants should hold on to the higher ground and be adhering to higher ethical standards. I might pass over to Sanjeev if he wants to add something on that.
I think, Chana, you very well covered. The only thing I would like to add is I think there is some hesitation in some of the practicing professional accountants that it may put an extra burden on them. And I think all of us are realizing that I think it's in the right direction we are moving. And I think it'll be a critical phase where the more outreach we do, the more people start accepting it. I think we should see a positive change in the coming months or coming years. And I think that was our goal. So there is initial hesitation, but I think people are taking it on board in a positive way. Thank you.
Thank you so much, Jens, Chana, and Sanjeev. Laurie, please.
Yeah, I just echo Jens' comment that amazingly, and these things do tend to happen this way, it hit really at exactly the right moment. Not just because it was an issue in front of the public eye, because I think tax planning has been in front of the public eye for some number of years now. There's been a lot of discussion in Europe. There's been lots of things that we've talked about here at our table. But because it was in the public eye, I think it's going to make articulation at the rollout easier for some people who have difficulty with change, which is a human thing, a very human thing. I think it make it a little bit easier for those people. And I just was going to say that I've noticed that myself, and I think it's just very sensible. And I think as people get used to it, it will be fine. I was reminding a little bit of how everybody thought NoCLAR was going to be too hard to do, and it of course wasn't. It makes sense. It landed in a lovely place. I feel the same way about this. This landed in a very good place, and it's going to be very operable for people. So.
Thank you very much, Laurie. Carla, anything else from your side?
No, Chair, I think that summarizes everything.
Okay, so let me just add a few thoughts and perceptions on my side. I'm not going to speak about any of the outreach initiatives in particular. We have people here, but I must say that before Australia, we had important meetings in Japan, namely a seminar which was attended by, I don't want to say wrong things, but I think around 1,000 people watching on, I don't know, 600, I don't know. There were many hundred people. Masahiro and Tomoyo may say how many, but there were many hundreds of people attending. And in Canada, it was before the standard was released, so it was not out yet, but we had the opportunity to say what we were doing. And we also had very good, very strong feedback, even if not all the feedback was positive, but this also helps us understand that there are different views. And someone said in Canada that, well, of course, it was in the good direction, but we should have done more and went further. So it shows the importance of what we are doing. Now, in general, what can I take? What are the takeaways of this outreach? First, very honestly, largely exceeding my expectations in terms of the interest that this topic is raising. It's a completely different topic. Our usual stakeholders and even part of the new ones to whom who we are reaching are not used to think about these kind of things. So I was not expecting that it would raise so much interest and attention and questions. It is it's a different topic. So it was, if I may call it like that, a quiet achievement. We achieved and managed to approve this standard in a process which was relatively quiet, not very much exposed. So of course we needed to do, and that's what we are doing, an extra effort to make this standard be known, understood, etc. But frankly, it's been well beyond what I was expecting. Thirdly, I think that this is an extraordinary hook to other stakeholders. It is really an instrument or a standard or a project which is making us able to link with completely different stakeholders, namely institutional ones. And I'm thinking about people at the European Commission with whom we hadn't spoken before, and OECD, etc. But even some others coming. And for instance, I will meet with the European Court of Auditors in 2 weeks or 3, and it was the interest that this standard created in the European Court of Auditors that created this interest in knowing more about the IESBA, about what we are doing, etc. So this has an impact which I think goes beyond the impact of the standard itself, because it's creating a new awareness about what we are doing. And lastly, there were some questions at some points. Well, we know that there were some questions along the process that we were able to manage very nicely. That some concerns expressed over the first part of the project were somehow mitigated, diluted, if not even disappeared at the end of the project. So I don't think we haven't seen any discomfort, and correct me if I'm wrong, any discomfort or rejection of what we have done. We have seen some questions about how to enforce this, and this is something that we'll have to keep an eye on it, because speaking about implementation and adoption and these kind of things, we will probably have to educate a little bit the ones who are going to enforce these tax authorities and things like that. Because they are really interested, but they want to understand better what to do with this standard. So all in all, I think that we may be proud and of the success of this standard. It's really a new. I think it's a new path that it's being created for us. Even with the relationships with the press, you have the list of press mentions, which is very relevant compared to what we usually have, even compared with the mentions on sustainability, which were already unusual in terms of numbers and etc. But I think that here it was even more impressive and more relevant, with some initiatives from some press and media firms, which were completely outside of our initiative. So they took the initiative of taking the standard and speaking about it. And a very special mention by the investigation consortium of international consortium of investigative journalists, the one who years ago started the stories on the Rwanda Leak, on the Paradise Papers and these kind of things, who made a reference to these standards as well. So this is really going very much beyond the usual stakeholders and diversifying very significantly our audiences. Now, this is not an end in itself. We don't work to be famous. When people ask us, namely the PIOB asked sometimes, but what is going to change with this standard? Will you really be able to change behaviors? Well, my answer, of course, has to be yes, otherwise we would not be losing time with this standard. But after having seen the impact that this is making, and I repeat, mostly with institutional stakeholders, I'm sure that this will have a very, very significant impact. Also because we had the chance of having people in the task force who are so able to explain how this is going to make a difference and what may be at stake if tax service providers do not take these new provisions seriously and do not use them to protect themselves and their firms against some risks and some concerns. And last point, this is also a topic that will help us very much and is helping already with our professional agnostic or non-PA approach, and not necessarily in the same direction that we are thinking about it on sustainability, because the question is now why should accountants have a standard, an ethics standard, and lawyers, consultants, etc., do not have it. So again, this is not something that the IESBA can do alone. We can't impose the standard to lawyers, consultants, etc. But the awareness that this is raising will probably, at least in some places in the world, in some jurisdictions, may trigger or give an incentive to political policy-making decisions to address all the providers in the same way. This is what has been considered in the European Commission, by the European Commission. The proposal has been put on hold for many reasons. I think that one of the reasons is that because seeing our standard, the European Commission probably thought it was not that urgent because there would be a framework in place, which is also absolutely fundamental, because the IESBA will be, even if the European Commission, and they probably will develop something in this area, this is going to set the tone and the scene for this standard. So really doing what we have to do also in terms of trying to contribute to global frameworks which are consistent and which focus on the public interest and on the change of ethical behaviors, in this case by accountants in providing tax planning services, but in the future probably by others as well. So sorry for this long intervention, but I think that we need to celebrate things when they are to be celebrated. We need to be honest when problems appear, but this is really something that we should be proud of, and that we should be aware that it's changing a little bit, not only our profile, but the profile of the services most surely. So thank you very much to all those involved, and here also a special thank you to Ken, who is also very humble, but was an absolutely instrumental, critical in advancing this project. Thank you.
If I may add, Chair Gabriela, this is not the end of the road with regard to tax planning. So there's a little bit more work to be done, not least as we run up to the date when those standards are going to become effective by 1st of July next year. But before then, as the board has seen in the papers, staff will be working during the third quarter on the development of draft FAQs, staff FAQs on the tax planning standards. And we will coordinate for one more time with the tax planning task force on the development of those FAQs. So I'm very much looking forward to continuing to receive the benefit of their wisdom and the advice of the task force members that we have around the table. And also, if I may add as well, maybe two additional points of information. One is we have initiated a dialogue with the GPPC, the heads of tax at the GPPC. Carla had, I think, already informed the board that she had a first conversation, an introductory conversation, I think early in May, which I couldn't attend. The next meeting that we've teed up with the heads of tax is going to be in December. They meet on a periodic basis. So that's a conversation that I will participate in, and we'll be able to do some interactions there. And of course, we will report back to the board in due course. And also, just so the board knows, we're also in dialogue with some of the institutes in the UK, in particular, as the UK POs look to adopting those standards, whilst also making sure that they stay compliant with the UK PCRT, which is the document that deals with professional conducts in relation to tax planning. And that is a document that has regulatory backing in the sense that it has been developed with the UK tax authority. So all in all, is to say, this, as I said, this is not the end of the road. We are going to keep this on our stakeholders' radar screen, and we will be updating the board as we continue our awareness raising and related activities to promote the standards. Thank you.
So the message for the task force is we will not let you go. You'll stay. So thank you so much once more. We will break now for coffee. Ken?
Well, we're coming to the end of the public.
Yeah, sorry. Yeah, that's true. I was looking at the agenda. We still have a session, but it's the executive session. So this is really the end of the meeting, the public part of the meeting. But we still have the minutes.
Yes. So indeed, I was going to ask for the board to approve the minutes. These have been circulated electronically to all of you. They've been reviewed, and we have received some minor editorial changes that have been shown in the markup version circulated to you all. So I'll just pause here to see if any board member has any comments, questions. No. So,
if not, Tom, I think that Tom, before we close the public session, wants to say something.
Thank you, Chair. First, I would like to congratulate the board for this week's very productive discussion in which several important issues have been raised and deeply discussed with a focus on public interest perspective. As for the firm culture and governance project, this Monday's meeting properly focused on the fact-finding and extensive research. I would like to commend the task force and the staff for this and very fabulous works. This morning, at the same time that the private equity investment cases were presented as one of the emerging issues, and I think that this illustrates a very good combination of the work of the EIOC and this current project. And at the same time, that I don't think that those cases as disconnected or standalone cases, but as Sadia alluded and Richie has said, that it's a global issue, and then this is a sort of the indication of the structural challenges that the firms are globally facing. Those cases illustrate the urgency of this project as well. So the next step is to formulate the direction to which we are heading for. In this, as I expressed in this session, the important considerations are anchoring the current fact-finding exercise and clearly are presenting how the code will deal with this issue and showing what sort of behavior or behavioral changes, especially at the senior level, this project is to achieve. That is one of the focus of this project might be. And I personally think that the focusing on leadership level and governance structure is very rather than adding extra compliance layer, maybe a good way to go forward. And regarding the sustainability and use of external expert issue project, many important issues are also raised, and the board, I think that articulated clear discussion to go forward. I'm very impressed by the board enthusiasm for the engagements, for the adoption of the new code and capacity building. I'm really impressed with that. And Barney has suggested there needs some sort of coordination in each jurisdiction to support that sort of the effort. It's very important as well. And as for the SSB coordination issue, especially on the definition issue, I think we found a very good step going forward. In finding a solution, rather than taking the approach of the two different starting point, gradually approaching each other, but not that way, but they take the approach of first establishing the identical definition and then considering whether minimal departure or deviation from it is necessary or not. So this is a very good way to go forward. And I think that deviation from the common identical position should be minimal and allowed only in very exceptional cases. That is very important as well. And it is described in the public issue statement of the PIOB as well. And there are many more works to do, especially careful and detailed examination of the draft holds on the next meeting. And if we look at the IWSB case, it is the draft examination was made March meeting, but June meeting. But as for the IESBA case, it's all falls on the draft examination and falls on the September meeting. So it's very, how can I say, path. And I'm well aware of the heavy burden on the staff and the task force for the preparation. And it pains me to say that, but at this stage, I have to emphasize again the importance of due process. It means that each comment should carefully be considered. And at the same time, the deadline for the submission of the material for the meeting should be strictly met for the next meeting, even more so than for the regular meeting. I'm sorry to say, but I have to think that's sort of the careful preparation is necessary in terms of due process. And perhaps there may be some sort of discussion after the finalizing the issue. What is perhaps an examination of the due process might be a sort of the issue. So I have to say that. But I'm sure that the board will overcome those challenges and demonstrate the IESBA's contribution to the global capital markets and public interest as well. So last but not least, I would like to express my gratitude for the privilege of observing this important meeting. I hope the next September meeting will be as successful as this meeting. Thank you very much.
Thank you very much, Tom, for your kind words and for your careful observation and conclusions and advice provided. It's clear, and now, well, this is already time for me to close the session, but just a few words. We are late, and I think that we spoke so much that there is not much more to say, but just in respect to the next meeting, starting with the future, yes, it's going to be a very, very challenging time for all of us over the next months, very challenging, and we may have to make options and choices, because even the topic that I wanted to address it, but the topic of the timing of the posting of the documents, I mean, you are more than right. The PIOB is more than right in signaling that, but it's impossible to present something which is already at the stage of analysis and preparation, which is enough for the board to discuss when, for instance, we had the closing of this consultation less than 1 month before. So, I mean, either we don't present things in a final way, just in a very superficial and not probably allowing for a discussion which is meaningful to progress. But yes, we'll have to make choices. I think that September we have the need to have something which is already not final, because the final decisions will be made in December according to the due process, but as close to a final version as possible, which means an incredible amount of work in analyzing the responses on sustainability reporting, sustainability assurance, and experts. It's 3 projects over the summer, coordinating at the same time and posting on time for a careful access. So it's not an easy task for us, but of course, as usual, we will do our very best and try to be as collaborative, on time and careful in our analysis as possible. With respect to this meeting, again, I'm not going to say much. I think that we make very, very, very good progress, even if, as I said at the start, it was not a meeting where we had to make many decisions or approvals or final standards or whatever, but it's what paves the way for the discussions and decisions that we will have to make very soon in September and December. If I may pick one or two topics on farm culture and governance, I think that Tom summarized it very well, so I'm not going to say much more because I was going to say exactly the same. It's now time to look at what was presented, and it's very good material, very good, very rich. It's time to start understanding what could be the way, the journey forward, but also think about ways of not, even if we need to narrow, sharpen the focus, not lose much of this knowledge that we gathered and information that we gathered over the last months. So I think we are in a very good place to advance in December for more concrete things. And the task force has already had some, I think, interesting discussions on how to do it immediately after the Monday meeting. On sustainability and coordination, well, not much more to say. We'll have the meeting on the 12th of July. There is an expectation that this will be the time for final agreements. I think that we should moderate these expectations, because we will do what we can do, the most that we can do. And I think that we, again, made good progress in this session. I hope that IESB, and I'm sure that IESB next week will make also their journey, their way in that direction. But still, I need to be cautious, because we are at a point where the answers, the responses have not all been analyzed, and we have not had the opportunity to build upon those comments and see, well, if there is anything that we haven't identified, and how much it is possible to build common solutions with that perspective signaled by Tom in the 12th of July. Anyway, it's going to be a very important meeting, and I'm sure that on the 13th of July, we will be in a much better position than we are today. And a lot of other very important topics. I think that this focus on adoption implementation is, as we see, it's not only a source of enthusiasm, but it's going to be really important for the IESBA board and the IESBA standards to progress. We need to take care of our standards after they are released, and make sure that they do and serve as they are expected to do and serve. With respect to the invitation that I sent to the board for candidates for a new working group or work stream, we'll see. I'm gonna delay a little bit the information about it, because we received some applications, so to speak, and we need to see how to deal with these. So I'll probably, if possible, inform after the executive session. If not, we will send you an email with the decisions very soon. And I think that for today, I just need, and it's probably the most important part of it, to thank everybody, all the board members, for the presence, for the participation, for the very good contributions, for the very constructive approach that you all showed in moments where this could have been different. Fortunately, it wasn't, but I'm speaking namely about the coordination topics that we have here on the table, which are very difficult to deal. But what I saw around the table was a very, very constructive and professional approach to this topic, and I thank you for that. Thank you to all those attending online. And finally, and more important than everything, my thank you to the staff for the incredible work and dedication. And really, this is not volunteering, but it's almost like that, because the way they are being committed and sometimes underwater with everything that is being asked them, it's amazing. So thank you to all the team, and also a special thank you to Astu and Diana for making this happen so seamlessly, for the last night's board activity, which was so nice, so relaxed, so friendly, but which meant, again, a lot of invisible work for those who not only had to organize, bring the food and the drinks and etc. It's a lot of work behind it, mostly in a week where everybody's requiring their help. So thank you very much. And thank you to IFAC for providing us with the conditions to have this meeting. And with this, I think that I thanked everybody that I needed to thank. Am I missing anyone?
I was going to suggest a round of applause to Astrid and Diana for all their support.
Thank you very much for those who are not going to take part in the executive session. I hope to see you soon, and thank you for your interest. And for the others, we will meet here again in 20 minutes. Okay, well, 11:30. Thank you.